Could you speak a little bit to the economics of selling bitumen and upgraded crude oil in the U.S. with some of the changes that are happening in the supply?
Well, if I could comment on Kearl, and I think it's kind of, Kearl is the I mentioned in my comments that startup's imminent. I mean, we're folks asked to define that. It's real soon. We're right on the cusp of starting up, and we're excited about, of course, Kearl, the high quality resource, the long life potential, and what we believe are some really competitive advantages we built into that project to keep costs below what other conventional oil sands projects will have. So what comes out at the end? You sell bitumen versus a synthetic crude. One of the real benefits that Imperial has, and through its relationship with ExxonMobil, is the extensive North American refining network. So we have the ability to put Kearl into a wide array of refineries that have upgrading capabilities and that can turn that bitumen into high-valued products, and that's what our plant will be.
It just seems the conventional wisdom in Canada is that you take lower value bitumen and then you upgrade it into a higher cost or a higher priced synthetic oil, but the market seems to be favoring selling the lower value bitumen.
Well, I think there's a cost issue there, because when you upgrade it in Alberta, then you have to transport it to a refinery and boil it again. You have to cook it again to turn it into refined products. And the advantage of a project like Kearl, without the need for an upgrader, is you upgrade it or refine it once at the end destination. And when you do that upgrading, and you do that upgrading basically so you can transport it, so you can put it in a pipeline and move it. That's where what we've been able to do at Kearl is eliminate that necessity because of the technology we've applied. And so you do all the cooking and the boiling that a refinery does one time. Saves energy, saves costs, and it ultimately will lead to a more profitable operation.